Here we go. So over to you, Stephen.
Thanks, Mark. See if I can find the right one here today. So I wanted to just kind of quickly go around the world and look at some of the important things that I think should be top of mind right now. And I think the big issue we're struggling with is really trying to sort out the rebound and the reopening from the Delta variant and some of the other structural issues that we're seeing, like inflation and other social and political issues that are at work. So I'm going to take you around and do some quick highlights, and kudos to Bill Deukler, who felt the need to bail me out by sending me some new material for this week. So I appreciate his help with this, because a lot of the material came from Bill. So this is a mobility index from Google that you can see for a lot of the advanced economies, from the dip last year, steady climb up. And I think that's a key element of what we're seeing. If you look at it from a TSA checkpoint numbers, you can see the travel is back to where it was before. So very positive moves there, and particularly when you think that business travelers aren't really participating in a very full level. If you look at hotel occupancy, I think the difference between the TSA numbers and the hotel occupancy is the lack of business travelers. And I think the CEO of Delta was thinking they would be 60% of business travel, pre-pandemic business travel, by the end of September. So a pretty dramatic move, and we'll see what the Delta variant does to impact that. But it all has led to a very sharp rebound after a sharp decline. But look how narrow the window was for the reversal and how quickly it took. But you can really see both from the emerging economies, strong rebound, the advanced economies, everyone's coming back quite well. There are other areas that in the advanced economies that we need to explore a little bit more. But when we look at it, it's still a very highly uneven recovery. But what's really interesting to me is the move that's going on in the EU. And I think what's going on with Europe, different than the financial crisis, is the fact that they've now moved away from austerity to more fiscal stimulus, and the idea of supporting monetary policy with fiscal policy should really open up some interesting opportunities. I think the other thing that's fascinating about what's going on with Europe right now is the lead they're trying to take on the green transition, and does that play out to really help them economically or not? I think what's going on with China is also interesting. They're experiencing a managed slowdown of their economy, and they continue to want to force growth rates down so that they don't have the disruption to the economy. And I'll touch a little bit more on that when we get to the PMIs later, but they're really trying to shift to more of a consumer-driven economy and less export reliant. That's a big shift that's going on. And in the near term, it's hurting China, but I think over the longer term, it may help. US stock markets are still pressing towards new highs, and we hit new highs yesterday, pulled back today, not unusual. But interest rates are at historic lows, and real interest rates are now at a record lows in the minus about 1.2%, even a little bit higher. So big changes going on there. I think the Delta variant's the issue, and as Mark and I were touching on earlier, Glenn Grossman, who's been on previous calls, thinks we're getting closer to peak issues on Delta. And if that is the case, that sets up for the potential for actually another reopening and strong risk on rebound. So I think the one issue that's really at play here is the economic distortions are really creating problems for investors trying to understand how to commit money for the long term in an environment where it's getting increasingly more difficult because of whether it's monetary policy distortions, COVID distortions, supply chain, excuse me, all those at play. But it is really interesting when you step back and see the Fed and ECB balance sheets have expanded $9 trillion in 12 months. That's roughly 45% of their GDP is where their combined balance sheets are right now. And just for comparison, it was only $5 trillion back in 2009. So pretty significant change there. excuse me. The other issue that I think is fascinating, you're seeing this all over the world, whether it's the flooding that you saw in Germany and China, the droughts and the heat waves and the fires that we're seeing out west and in the south. A lot of that's being linked to a slowing and a wobbling of the jet stream, which is creating these different patterns and flows, which is certainly creating disruptions and distortions in economic activity. And all these things have to come into play when you're thinking about your investment strategy. On the positive side, you do see continued improvement in unemployment in the advanced economies. So significant changes, but still more to go there. Commodity prices have been a bit of a challenge with the move up. I do think you're going to see a separation in the commodities, and I think the industrial metals will have a little bit longer run. And when we talk about the flooding and the climate and the other issues, you can't take into account, you have to take into account cybersecurity, and that's playing into the commodity space now. There's been a ransomware attack on the South African, one of their big port systems, and that actually has an impact on the copper distribution and copper supply. That ransomware started last week, and we'll have to see how that plays out. But when you block the ports and they're not moving stuff, that actually creates even more supply chain distortions in the system. So something we have to see play out. When I look at the commodity area, though, the one area that I do see continued upward move, in my view, is going to be in the industrial metal usage going forward. Inflation, you can see, has come down and then ticked back up a little bit. We think it's going to be a little more persistent for a couple, maybe a quarter or two more, maybe 3, but then it'll start to come back and normalize again at a lower level. The yields, these are advanced economy 10 years. The real yields are significantly negative, and this is as of June 16th. So we know they're even further down from the 1.6, down around 1.3 right now in the US 10-year. But what's the message from the PMIs? And I think there's something really interesting going on. So this is kind of the world PMI, and you can see the composite is in expansion territory, which is over 50. Services and manufacturing are on a nice upswing, but inside the PMIs is a different story. When you look at the US, we're seeing nice expansion right now, but on the services side, as the virus started to pick up again, you start to see the services come back down a bit. Europe is actually in a very healthy area with over 60% on all 3 areas. That's really nice, and you can see that led by Germany and France. But China is actually just hovering at expansion levels, and actually their numbers for May, so not quite as strong, and Japan has some other problems. I think what's interesting about what's going on in China, and this has some big market effects, is really some of the things we're seeing with who they're going after and how they're dealing with their corporations, which is government intervention and the heavy hand is actually an interesting thing at play. But if you break it down, what were they doing? And are they really trying to hurt their stock market? I think the answer is with BABA, they were really focused on antitrust and also not having any one person be bigger than the party. With Ant, they're really focused on social and financial stability when they were going after Ant. With Didi, it was about cybersecurity and data management and who controls their data as a country. And now with what you saw with the for-profit education, we think that's about their demographic issue. And that's about the cost of educating your children, and the cost of raising children is something that's slowing them down. So one of the things that you might be seeing is the party really taking a very forward-looking view about their demographic issues and the cost challenges around that. And what are the big costs there? It's childcare and their cost of raising your child and educating them. It's also the healthcare cost and the housing cost. And finally, it's the cost of care for parents who don't have a real safety net. So we think the markets are going to continue to be biased upwards. Not that we won't have a lot of volatility. We expect quite a bit. but you can see around the advanced economy, some very healthy moves up. We think that there is strength to continue that as we move forward, but we are in a very fragile global economy, and there are a lot of distortions. And for us, that means you either have to be a really good trader or you have to take a much longer term view of and invest in the secular themes and not get caught up in the short term noise. So Mark, with that, I'll stop and just give you the final thoughts of recovery is on track. It'll be disrupted from time to time, but volatility is going to be a big part of it in the economic numbers, in the health numbers, and in the markets. We think this is a very positive backdrop for equities, but you want to focus on earnings and earnings forecasts, their input costs and how they can control them, and who has pricing power going forward. There will not be an opportunity for multiple expansion in the near term. Rates are going to stay low. The printing presses are going to continue to roll. There'll be more discussions about tapering, but that's going to come probably leading up to the Jackson Hole. But the central banks right now believe that their risks are higher than on deflation than inflation, and they're willing to tolerate a little bit higher inflation levels. Policy support is going to be there, and the delta is going to be the big issue. So, Mark, opening it up for comments or questions or discussion.
Thanks as usual, Stephen. Any comments, questions?
Again, Bill, I don't know if you're on, but thank you for the help.
Yes, one of the many tiles here. You're quite welcome. Yeah, I thought the slide on the real rates was particularly interesting. The fact that we're still, kind of in negative territory.
And no end in sight on that.
Yeah.
I mean, what are we looking at for a catalyst there? I mean, all this is so much speculation on both sides, but what do you think that we're really looking for a catalyst in from a timing standpoint? End of Q3, beginning of Q4, PMI numbers. Is there anything from a timing perspective you can overlay?
No, I think they're all of those things are going to be at play for some time. I mean, we're reacting to a pandemic as if it's new. When you look at the history of pandemics, they don't end quickly or easily, and these waves that we're having are quite normal. So I think what's happening is people's expectations or hopes are getting ahead of the reality of what we've experienced in past pandemics, which is they take time to work through the system. And what we're also experiencing is really unusual political and economic and social forces all hitting at once. And that creates even more anxiety and more emotion in the markets. And, it's just a reminder, markets are inefficient. It is an auction market that they trade in, which is fully based on the perceptions that the market participants bring every day. And that is why we've always had the view that the markets are inefficient. They get more efficient at times when everyone's doing the same thing, but that just leads to the outcome that you're going to have greater inefficiencies later. So I think we're just going through a normal process that you would work through a recovery. But one of the things that Ed Hyman of ISI points out pretty regularly is that you won't see a recession until you see earnings peak, and it doesn't look like earnings are peaking right now, in spite of what the market seems to want to hear. But we think that we're in a good spot for continued growth. We just have to, manage the reopening without blowing it up. The debt ceiling is going to be an issue that people are going to raise. That's usually a non-issue. It's more political theater than anything else. And so we really just have to kind of let things play out on the recovery and hope that the Delta variant is managed the way Glenn Grossman thinks it might be, and others. And Scott Gottlieb was on yesterday also with a similar view of we're getting closer to peak on the Delta. So I think we just have to let those things play out and not get too caught up. But for us, the same thing that, think about the big themes, they're going to be with us for a long time. We're not going to avoid the digital transformation. You're not going to avoid that we're going to have a debt bill coming due at some point. So you just have to manage your portfolios appropriately for that. The other thing is liquidity does dry up eventually, and we're in a highly liquid environment, but that can turn pretty quickly. So
Hey, Steve, it's Rob here. The choice of South Africa by the bad guys on this cyber attack, how much of that do you think was to sort of just temporary political instability, or do you think it was sort of deeper research as to vulnerability and the ability of the counterparties to pay?
I think the hackers have a plan for where they're going, and they usually go to the things that are most vulnerable. I mean, that's really the whole game. If you're a hacker, is don't go to the hard places, go to the easy ones. And they must have felt that there was an easy one here. They also do look for the reward. So you want to have somebody who's going to pay. I mean, it doesn't pay to rob a bank that has no money. So they want to go where they can get paid to. But I think this is about vulnerabilities and exploiting them. And that's what they do.
I'll back that up. You know, usually hacking, the more disruption that they do, the faster they get paid.
Yeah. And knocking out two of the biggest ports for traffic for the southern part of Africa is actually pretty damning. And particularly when it's a lot of the commodities that flow through one of those ports. I mean, I think the hackers are smart and good. So you don't want to praise them, but you have to give them credit. They know what they're doing.
Stephen, would you be overweight EU versus US reopening? And if yes, is there an immunization component to that view?
I wouldn't necessarily be overweight EU versus the US. I just think the two economies are very different. And I think Europe has a lot of positive things going on around it, but they still have, in my view, some real structural issues from going back to when they were to inception. They don't have the right matchup of fiscal and monetary regimes to give them the institutional structure to allow them to deal with problems effectively. And I worry with the turnover in leadership with Merkel and what happens with Germany's role and how does that all play out. I think that could wobble things a little bit more. But I do think they're doing a lot of positive things over there. So it's a question of, I think the US is still in a better shape. But I think Europe is in a much more positive trajectory than they've been in a while. I think selectivity in anywhere around the world that you're going is going to be what really matters. I don't think this is I want to own the market. I think you want to own areas in markets more so than ever before. And I wouldn't unless you're really good, I think this is a tough environment to trade. So I would say that, there aren't a lot of great traders. And I think you got to really take a more secular view to deal with it and not get whipsawed.
Other questions, comments?
Rob, back to you. What do you think is what's keeping you up at night for this stuff with what's going on today?
Well, I lived in South Africa for a while, and we invested there in the aviation sector. So that I thought, picking that up and your inputs were good. I think your comments on at the beginning with respect to the jet streams was interesting. I'm just thinking out loud as to how does a government sort of how do they address that? Because that doesn't happen quickly. But I think it's encouraging that the populace, particularly, sort of the ESG movement is kind of, getting so much climate driven. But look, it's we like special sits and the like, so I sleep well at night because, you're able to hedge in both areas there. But I thought that was a pretty interesting, sort of, trip around the world. Just going back to the cyber side, I guess the most notable ones on this, the attack, what the JBS Meats, which is Brazil entity, but then, in my area there, Virginia, the Colonial Pipeline, it's an interesting, and I think the Colonial Pipeline, and it's disclosed, I think they paid a settlement here, it's something for that to happen in sort of domestic US in a kind of a conservative area, and also in places like the emerging markets is kind of troubling. But as you say, that's part of the where some of the technology brains are going, and hopefully we have good guys on the good teams to be able to counter that. So that is a bit of a concern.
Yeah, the jet stream wobbling and slowing actually, it was a pretty interesting study that was done on that, and attributing that to these unusual weather patterns we're having is actually, I don't think is a country issue. It's a world issue. And that, I think, one of the big problems we've had with, a lot of these climate bills is if you don't get every country on board, it's hard to affect the change, because the bad guys are worse than the good guys. So I think that's going to be a problem to get this squared away.
You might have noticed Virginia, DC, Baltimore, Philly, Rob, that's on deck. We're heading your way.
Oh, cool. Well, I'm in New York the next couple of days, so, but
I might be in for dinner tonight. And definitely on Thursday, we have our lunch and drinks again.
Okay, yeah, let's connect by text. Actually, NASDAQ has been in touch with me. I think we may have drinks with them this evening, so we'll communicate.
Nelson Griggs, the CEO of NASDAQ, is a Denison alum. FYI.
They're everywhere.
We are.
When you say these events are quote on deck, does that mean this is like part of the tour, or this is something else? These are other events.
These are just they're on the radar to be put on the schedule. Sometimes it just takes a couple anchors, but we're going to get down there. Gregory, do you have a question or comment? Looks like you did.
Yeah, I mean, in terms of what's keeping people up at night, is there a few seconds to talk about what's happening in China? Is that okay?
Yeah.
So, in a rare disagreement with Stephen, perhaps, which I highlight rare, I'm a little wary of assigning these very specific explanations to each of the sectors, because they're getting too broad-based. So if you look at, one of the things not mentioned today was what's happening with Tencent, right? So Tencent suffered one of the first attacks in 2018, and that was on the gaming side, which has been mentioned again recently. But over the weekend, they suffered an attack on their music business, where they have to give up the exclusive rights to music distribution. So these things keep getting broader and broader. One of again, the press likes to blow these things out of proportion. So, within all this, there may be great opportunities. But I think we need to look very closely at how all this progresses. And I'm not sure, but the one of the bigger problems I see is there's been a lot of value lost in emerging markets, because China's 38% of the main index that everybody follows in emerging markets. That could lead to rebalancing of investment programs and a lot of things. So I think that's something that needs to be looked at.
Greg, if I gave you the impression it's a positive, it's not. I do.
No.
But I do think it is pretty well thought out, and one of the things that I think she is very focused on in this 100-year anniversary mode is social stability. And I think he's worried that about the perception of inequality getting high on a lot of these companies too. I think that's part of what he was going after Jack Ma for. But they are worried about bringing costs down so that they can make sure that they have a population that's supportive of the government, not against the government. I think at the end of the day, she's looking for support for his agenda going forward, and the way to do that is to use populist approaches. And I think some of these are viewed that way. So I do think there's a lot of marketing behind what he's doing internally. I don't think it's necessarily good for investments in those companies. So not surprised if more Westerners don't dump more of their securities as they have been lately.
Yeah,
So I
agree.
think I think it's an issue for capital flows. I think it's a positive for control if you're Xi, and I think he's trying to send a message that I don't know if it's going to work or not, but
I agree.
it'll be interesting to see.
Yeah, Stephen hit the nail on the head there. This is, I think, an example of digital authoritarianism that the Communist Party is unleashing. I think they're starting to realize that there's about 20 million people in that country that are beholden to the party, that are in charge of 1.4 billion people. And if there's ever a mass scale uprising, they're screwed. So I think you're seeing the government significantly assert its influence and control. That listen, we'll have law and order to a certain extent, but you've got to play by our rules, full stop. And if you don't, then, as we've seen in countless cases, regardless how much wealth you've amassed, you're no longer receiving most favored nation treaty inside China.
Yeah.
It's a very opaque landscape to do business in.
Yeah, the other thing that I'd probably add into this too is that, I've been reading a lot about the younger generation in the Chinese markets, or just in the country are really not following along with the lock and stock of the communist kind of way of doing things. And it's going to be interesting to see how that affects those plans and what they're going to do, because I think it's going to completely change the way China operates.
Read up on the Chinese 996 initiative and the counterculture that's growing against that. So the 996 is the mantra from Beijing saying that you're going to work, was it 9 hours, 6 days a week or something like that. And the youth are like, no, we want to have more autonomy, more freedom. We're not going to go down that path. So they've got some systemic long-term societal issues that I think are going to pose a challenge, which is why I think the party is going down the path of hammer-fisted authoritarian rule.
Yeah, I don't think that's going to bode well too much for them.
Gentlemen, Mark or Luke, Hamlet, question: is that what you're talking about in China, the youth? Are we seeing a generational change there as we are seeing here in the United States as well as Russia? Is that what it is? Thank you.
My humble opinion, yeah, I think that's what you're seeing. You're seeing the younger generation. I'm talking about the ones who are now starting to come of age, who are starting to get a better sense of what's going on outside of China, and they're rebelling against what the party has been pushing down their throat. These guys probably align with the mid 40s, early 50s generation, who grew up in the 90s and early 2000s and were pretty well ingrained with the West, and have seen everything cut off in the last 10 years as Xi and the party has tried to consolidate power. Because I think, personal opinion, I think China woke up one day in around 2010, 2012, and realized that they're slowly becoming westernized, and the Politburo, the party panicked, and they used corruption to massively tamp down the populace and take control. So you're seeing the young generation and kind of that mid-age generation slowly rebelling against that.
Yep.
Would it be fair to say that the government has lost touch with the population? We're seeing the same thing in Russia, yeah. And what Russia is doing is bringing in younger technocrats into the government. Is China doing the same?
I don't think it's losing touch. I think it's losing control.
Yeah, I would agree with that.
Yeah.
I think technologies, because it's been, there's so many ways to get around some of the China lockdown that the kids are getting around, and the influence that's having from Western music and other digital media is just, it's out of control. And that's why you see what Hamlet's talking about is the lockdown of controlling what they see and what they can't see. But I think it's already taken effect, and it's already kind of permeated throughout the youth, and they're trying to pave their own way path.
So on that note, as the world's not getting any safer, it's one of the themes that Stephen Burke talks about and how they manage their investments. This is an investment opportunity. So I would say it's we got to play defense and offense, and we are all sitting ducks in many ways. But let's invest in best defense.
Yep.
And we try to do this through funds and companies, and you know, this is an area this will probably be 2, 3 of 10, 20 deep dives over the next several months. So with that, and those who don't know us at 361, if you're new to us, we just try to help, as it says in the bottom, is just try to help each other make money and help the world. Part of that, making it safer in some respects. So I think here today we've got when we do these events, I was just showing earlier a slide on the events we have coming up. I'll just give you a quick note of it, so you have it on your calendars. What we've got, and these events can happen like literally overnight. If somebody says, I want to do an event on crypto, even though I'm a crypto skeptic, you assemble a group, and we're sort of an open architecture platform. And so much so that, I think we should go down to Virginia and DC and Baltimore, and we're going to make it happen. I don't know if we'll make it happen while it's still super hot and humid, Bill, but we'll get there.
Right, take your time.
Yeah. But we are going through the Midwest, and if you didn't know, there is a 4th Midwest tour. Done a lot in cannabis. As you'll see, that group has got a system. I put on here, Bill, the virus mini update number 7, at least as a placeholder for a couple weeks time after these Tuesday briefings. And so with that, I believe I'm handing off to you, Luke, to set the stage and over to Bill.
Yeah, so thanks everybody for joining the cybersecurity market outlook talk here and for 361 Firm. And we appreciate everybody taking their time out. There's a lot of topics here, a lot of great speakers, and we're looking forward to it. Mark, we're going to go to you for talking about the, I guess you already did 361 Firm, so you could talk about the Midwest tour, and then I'll turn it over to Bill to introduce our keynote speaker, Dr. Liu.
Okay, well, if you give me any time to talk about the Midwest, I'll take it. I'm a kid from the Midwest, and we've got an event coming up. I'll just flash it up here. I think it's pretty special. In some ways, it's the flyover zones that we like best. I'm from a small town in Ohio, and I went to Denison and then Michigan. And so we've got a tour that will hit, the Chicago, probably starts on the 22nd, and where we're going to go to an interesting racetrack and maybe a baseball game, then over to Detroit. In Chicago itself, there'll be, I think cybersecurity will be one of the themes in the breakouts. Then over certainly cannabis and healthcare, and Detroit, a little really interesting emerging market itself. Ann Arbor, where we're going to talk about tech transfer, one of the best R&D programs in the country, world. Then down to, stick around for a football game if you want. Jim Harbaugh is going to be meeting us for a half an hour. We can go to a Reds game. Before that, we see the whole venture community of Cincinnati. Over to Granville, which is my home in Denison. And we're going to talk about inclusion and mentoring there, and then what's happening with Midwest as this great emerging market. Then Columbus industries, asset classes, with a lot of the allocators, funds, and companies up to Cleveland. It's Innovation Center, Nottingham Spurk, into the downtown area for the Rock and Roll Hall of Fame. I practiced law in Cleveland for 3 years. Pittsburgh, these are all like two hours away, which is great. Pittsburgh, Carnegie Mellon, more innovation, more cyber, and not just, the industrial heartland. And then up to Buffalo and Niagara Falls, Toronto. Again, protocols notwithstanding, very excited. If you want to find out more, it's our 361firm.com/MIDW. So
I would like to throw in there, Mark, the two things we also, you know, from my end, emphasizing about the tour. One, re-emphasizing what you said about this idea that the Midwest is more than just the industrial heartland. There's a lot of diverse talent here, and I don't mean diverse, you know, from the, you know, demographic side. I mean diverse in terms of the types of talent and different things that the people are into. A lot of tech talent here in the Midwest that is being underutilized, right?
absolutely.
Second one would also be the not just Midwest, but you know, I'm into this idea of Great Lakes, right? Which is why I was really excited to see Toronto on the tour, right? Because the Great Lakes also extends on the other side of the lake to Canada. So, you know, I'm like how you say, #1 fanboy about how the tour has been,
Great.
you know, growing and developing, right?
Well, and along with, you'll see all the industries, and cybersecurity being one of them. This is a co-leadership platform. So as you see things and you want to participate,